side, domestic demand has been a bit soft with our measures of real per capita expenditures. We've had some problems though in that data because we're comparing to some kind of unusual data a year ago as we were going through the port slowdown situation that backed up some product on U.S. ports that by the calculations we use showed up as consumption until it went out. And so it's been kind of a strange comparison year, but April, the data that came out Monday for April exports completed our information that we needed to compute the real per capita expenditures. And April was up 3% from a year ago on real per capita expenditures, which is our measure of demand. For total meat, we're still down for the year. Normally, pork bottoms out on real per capita expenditures in the summer, gets extremely strong in the fall. We think we'll probably run above last year's numbers all the way through the summer, and if the history tells us we'll strengthen in the fall. So I think there's still a good probability that we'll end up stronger for demand this year. And that's pretty remarkable because we're comparing to some pretty good numbers in the last couple of years. That's a long-term uptrend for pork demand that's been going on since 2010. Part of that is the recovery from the Great Recession, the economic recovery, and a big part of it has been the change in some preferences and consumer viewpoints of animal fats and the role of protein in diets. And we've just seen a strengthening across the board of meat demand over the last few years. So that's a positive for the business. On the export side, again, the April data is very strange because last year, April was the cleanup month from the port slowdown. And so April exports were down 11% from a year ago, but they were compared to a very unusual number last year. So I'm not concerned about that. Year to date, we're up 1/4%. That's been a bit soft. We think that exports are going to be up 4 to 5% for the year still. The big news in the April exports, of course, was China. China and Hong Kong up 95% from a very low number last year and back on their long-term uptrend, which is good. The question now is, will they just stay on that uptrend, or are we going to have one of these windfalls like we had in 2008 and 2011 of exports to China? The futures market seems to be betting on the second of those. It's been a big run the last week or so on this news of China. I think it's a great opportunity for producers to be pricing hogs for kind of the foreseeable future here. We do not have our cash forecast anywhere near as high as those futures prices are at the present time. We don't think supply and demand really justifies that kind of price unless China is indeed in the market in a very big way as we go through May and June and into July. So that possibility exists. We haven't seen the data to support it at this point. Of concern right now is what's going on the cost side. We went into this year with a very good cost of production situation based on 2 good crops the last 2 years. Right now we've seen corn go up 40 cents a bushel, 50 cents a bushel. Bean meal is up over right at $100 a ton in the last, 6 weeks, something like that. 2 things going on there. One is the inflow of investment money from commodities firms back into commodities. And that's a general thing that's happened over the last few months. As oil got back above $50, that money that was on the sidelines has come back in. They always come in on the long side on this thing, so they pull these prices up. And then we've got a weather scare going on right now with some forecasts of dry weather this summer. Ellen Taylor gives a presentation again today at lunch. If you want to hear more about the weather situation, I'd invite you to come over to the Pork Board tent and listen to that. He does a good job. But the transition from El Nino to La Nina, and when that happens, is really critical for weather this summer. Dr. Taylor thinks it's going to be a little later and doesn't think we're going to have a problem. We've seen some other people that said, oh, it's going to get hot and dry. And if it indeed does, then these prices are justified. It's not unusual for us to be talking about a weather scare in the grain markets at World Pork Expo, okay? Because we're sitting here and we're still pretty much hand-to-mouth. Now, we're going to have a carry-out of close to 1.8 billion bushels this fall. So it's going to take a really short crop to really get that significantly tighter. But that could happen at this point. It still could happen, but we have plenty of ground moisture right now. The drought condition index in the United States, very low for all the major grain producing areas. I've been looking at this everywhere. Oh, it's going to get hot this weekend. And I've been going, let's see, 90 to 95 with lots of moisture. That couldn't be much better for developing corn and soybeans. Okay, they need the heat days, and we have plenty of moisture. Now, whether we have plenty of moisture when we get the second week of July and we start pollinating corn, that's another question, and we'll have to see if that happens. So those are kind of the issues on the markets right now.